Alright guys, welcome back to the channel. And this is Pi USDT. So I did a video on Pi. I've been doing price analysis on Pi USDT for a very long time. And I want to do a video on this coin, not because of the whole price stuff. It's just because I've seen a very good strategy or a very good price action here, and I want to like use it to lecture more. I have a playlist about price on Pi where I talk about the prediction and every other thing. And I also have a playlist on CRT entry model where I also talk about that particular concept and how to use that particular concept. So CRT is like a candle range theory. So I have videos on it. So whenever I see a good price action, I'll tend to use it to, explain. So in the last video where I have on Pi prediction, I did a prediction on Pi price getting to zero point 0.3 or at most going to 0.6. I did that video right from the monthly time frame using a top-down analysis. And on the weekly time frame, I said something about price being bearish. Yeah. So if you just watch the first video, it will be good. You watch the first video, you go to the playlist, check it out, watch it. Then this is not about price prediction, but I just want to explain CRT entry model more because this is a very good price action. And assuming I was actually trading more of currency like cryptos, I would have taken this trade without any, um, without any panic level or stuff or any reason to doubt the entry. Now, it's something about CRT entry model. There are three things you should know about CRT entry model. Now, the higher the time frame you find this your entry model is the stronger the is the more chance you have of it playing out. So if you're finding your CRT entry levels on the weekly time frame, monthly time frame, there are 70 to 80% chances that it's going to play out for you. Now, I'll tell you what the candle range level is. The candle range theory. So it's talking about a particular range or let me just draw it. So it's talking about a particular range of candle because the meaning of CRT is candle range theory. It's talking about a particular range of candlesticks that have not been traded in a very long time, and maybe after um like I said, the higher the time frame, let's say from the daily time frame, you have a particular level. You can call it a resistance level or a support level. It could be either ways. So it's just talking about a particular range that has not been traded in a long time. That's mostly liquidity. That's monthly liquidity. Now, if you're looking at this structure here, you have this to be a particular range that have not been traded in a long time. So you see this high, these highs have not been traded above in a long time. So the act of price taking out this long-term liquidity, that's just the simple logic here. The long-term liquidity is the whole candle rate theory. So your entry is just going to be after the sweep of this liquidity, and your target is going to be the next level of liquidity. If you check, that's just all I've been talking about candle range theory. Now, in candle range theory, the second thing you want to know is the trend. It could come in a bearish market, bullish market, and in a consolidating market. But you might want to avoid the consolidating market because if you're trading a candle range theory in a consolidating market, it can be really tricky. But trading in a trending market gives you another high level of confidence, makes it a more high probability trade setup. Let me explain. Now you know that in this market here, you can see that this market is obviously bearish. The last thing here that happened is bearish. So you cannot call this a bullish market even if you have this retracement going up. Even if you have this retracement going up here, you cannot call it a bullish market unless price can do fully close above this last high here with a very good momentum. That's when you can now say, okay, market has changed its overall bias, and instead of expecting this candle range, you have to see like this is the one thing. You can now call this is not going to be a candle range again. This is now what you might have here. Instead of having a candle range, you can now see that price has fully changed direction from here. I wish I have more examples, but I'm just using this one to like give explain. So this is no longer a candle range theory. This is a breakout, or you can call it a break of structure. But when you see that it's slightly above the last high, that's now a sweep of liquidity. And once price sweep liquidity, it targets the next liquidity or any other level inside the internal range. But at most, it's going to retrace down into 50%. When I mean 50%, 50% of the range, you can measure the range using your Fibonacci tools or something like that. So you're expecting price to trade above or below 50% level. So that will be your first take profit before the next liquidity. That's what I just want to say. Now, let me just explain using this chart here. Now, in that weekly time frame, I was able to cite out, this high here as my liquidity, and it's also a good trade analysis. Like, it's also a good strategy or point of interest. Having this old swing high, and this particular swing high here, if price should take it out, having this break of structure will give you that candle range theory entry, because you see how this level has not been traded into in a very long time. So that's just all about candle range. And this is a very good example. So the first thing you want to see is knowing the range or the level of liquidity that price is going to take out, which was this one I marked out. The second one, you want to be sure that this trend, you're trading with the trend, is going to give you a very good trade or a very high probability trade setup. Then the third thing you'll be looking out for is a shift in market structure in a lower time frame. Maybe let's use 15 minutes in this scenario. You can go as low as 5 minutes depending on the pair you're trading. So if we are using 15 minutes in this scenario, you know that if you are going to look for a market structure shift 15 minutes here, one thing that is going to tell you that you have a good market structure shift is if that shift occurs with a momentum, then you know that it's a very good market structure shift. So how do you know a market structure shift? It's when price take out the last low. So this is just very nice because you can see this momentum in price taking out this last low, taking out this last low. Yeah. So from here now, from this particular level, after this closure, you can call that a market structure shift. Then you see here is a fair value gap. This is your entry point. This fair value gap here. And you see how price came back to retest this fair value gap area. And I did not really see price go above here. So this would have been your first entry. Your first entry, you're going to be shorting from this fair value gap. If you don't know fair value gaps, you still need to watch videos on that. If you want your loss or you want to have a safer SL, you can use this high. But me, I'll usually use this fair value gap as my SL. And if you're targeting, what will be your target? Your target will be this next range here. That is your first entry, and that's like the only entry price gave in this market. That's like the only entry price gave in that market. You can see price never really gave another chance because it was just too heavy. You look at it on the 1 hour, that was the perfect spot to enter. So that's just all you need to know about candle range theory, because if you know this, you can just take trade easily without any confusion there. So that's one thing I always like to tell people. Candle range theory is one of the best entry strategies you ever have. Apart from fair value gaps, candle range theory is another good one. If you're actually taking it from a very good point of entry, like a very good level. Like I said, the higher the range you're like taking out those liquidity from, the higher the confidence you have in taking those trade setup. So you can see this is a very good 1:6, and I'm sure in like 1 or 2 days it played out. So imagine trading this, imagine seeing this setup. And I already did this analysis and I kept it. Just that I don't really trade cryptos. That's just it. So this is a very good trade. Yeah, I also have more videos on candle range. So my aim is just to explain till you get that very valuable video that consists of everything which will be more valuable to you guys. So that's just everything on this video, guys, on candle range. So you just need to start marking out your range from a higher point of interest, like a higher time frame. Imagine having this range from a weekly time frame. A weekly time frame is a very good point of interest, and you know that it's going to really play out because you're taking it from a higher point of view, like a high point of view. A very good time frame. Weekly, even the daily time frame too is also a good time frame. So look out for candle ranges like a sweep of liquidity. So let me just come back with 2 minutes. First thing you're looking out for is price taking out a liquidity from a very long term level. From a very, very long term level. Then the second thing you'll be looking for is also um trading with the trend. If you're trading with the trend also is also a very good um, boost to your um bias. Like when I mean bias, boost to your analysis. You will not be too confused. Then the last thing is, entering after a good shift in market structure. A good shift in market structure consists of a number one, consists of price closing below the last low and having a very good momentum. And you can see this played out very nice. I've never really seen a good price action in a very long time like this. You can see this is it here, a very good one. You can see the momentum here, very good momentum after that closure here, and immediately price return back to this fair value gap where you just have as your entry, and your stop loss could even go as low as the fair value gap, but still, let's just take it that we were trying to cover up to this bullish, sorry, this bearish order block here, just in case price just want to come back to fill up this liquidity void and mitigate this order block. So just easy. Some days price are really easy, but yeah, that's just all I want to say on candle range. Sha. I have series of examples on candle range. Just check the playlist and you get to find it.